Hello traders, Gary Wagner here just before 10 o'clock in Honolulu, 4 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 27th day of March, 2015, and this is the daily report for gold and silver, our weekend review, and what a week we've seen in the market. We are going to end with the precious metals trading lower across the board. Gold currently off about $5, $6 on the day, just below 1,200 at 11.99 and change. We have had a high of 1205, a low of 1192.70, which is important because we had two strategies to exit the market. We'll talk about both of them, but in either case, you are out and out with a profit. And we'll talk about the distinction between the two strategies in a second. First, let's take a look at silver. Silver is lower on the day, off about 12 cents. Currently trading below 17 at 16.97, the low 16.88, the high 17.19. Let's first hit on our silver trade. We are long in terms of price entry point at 16.13. Our stop is currently at 16.80. We are still effectively in the market. We're effectively in the market with a really decent profit on that, but we'll go in long over the weekend with our stop at 16.18. However, gold is a little bit different. Now, in terms of our gold trade, we got into our gold trade at 1170. We made a suggestion on Friday's show to place a OCO order in. That would be one strategy. And in fact, I'm going to play the excerpt from last week's weekend review that talks about that so we can look at it. And I want you to look at it within this context, because what you'll see is that we talked about putting a price order in to get out at either 12.18 or 12.19. You can see that the market did hit a high of 12.20, so that OCO order was filled, and it was filled at, call it 18. So we're in at 1170, we're out at 18. That gives you a pretty decent profit. Let's go ahead and listen to that right now. And then I believe that in terms of upside moves, we have the potential to go as high as 1220. So one of the particular strategies that we're probably going to implement is to actually put in what's called a OCO order, OCO. And what that means is one cancels the other. And so whereas we have a stop in the market at 1160, and we also want to put a price order to get out, say at maybe 1218, 1219, and you put it in as an OCO. So as you can see from last week's weekend review, in which we actually initiated that strategy, in either case, we did get out with a profit. But the reason for picking this particular price point last week, meaning around 1220, 1219, was the fact that we were looking at this harmonics, a 61% retracement here, a 50% retracement. And of course, these retracement levels all go to the top at 1309. One begins at 1130, and then the second of the two fib retracements begins down here. I believe that to be at around, call it 65, maybe even 70, but 70 to the top is one, and then 1130 to the top is our second. And so we get these real nice harmonics in these different levels, and that's why I believe that we could potentially find support in this area. And if it does not hold this area, our next real level that we'd have to look at would be for the market to return to around 1178, but we'd also want to do one more fib retracement. We do the retracement from here to here, and then we look to see where our 23 and 38% retracement falls to see where we could see this market move to. So regardless of whether you initiated the OCO strategy as I suggested, or you simply trailed up the stops as our secondary strategy, you're in at 1170, you're out at 1194 if you trailed your stops up, you're out at 1218 if you use the OCO. So you can absolutely see that there was quite a big difference in terms of the range that we were able to capture by implementing that strategy. And what I really believe at this point is, since we're not looking at a runaway trend in the market, that this type of strategy, in other words, looking at where we think the tops might come in and placing that order to get out, if in fact it does hit the tops, is a strategy that we will implement throughout this year, 2015, until we see a point in which we have an incredibly defined trend either to the upside or downside. Because the one thing that you limit with an OCO is, if in fact the market came up, hit our particular price point OCO, but barreled through it and continued higher, of course you would miss that differential. Where this particular strategy really comes into play and makes a lot of sense is where you get a market that's trading rather stair-step-ish. In other words, it's moving to a certain level, and then you're getting a defined, calculated retracement from that point. So traders, as far as our silver trade goes, we are still actively in it. Our stop right now is sitting at 1680 on a protective stop. We got in roughly at 1613, right in this area. This is actually the day that we probably got in at, looking at where the market moved, because we had the engulfing bullish, and this is our confirmation. So this is where we would have entered the market. So this is roughly our 1613. We've been trailing our stops up. Our upside target, though, has been 1750, and we really have gone close to, but we didn't really hit that. So if you put in an OCO order, depending on where you put it in, you either were or were not filled with silver. But as I said, I put in an upside target for silver, but I didn't use the example of the OCO with silver. So we are still long this trade, and we're long, as I said, from 1613. This has been Gary Wagner, wishing you, as always, good trading. We certainly got that this week. We'll look forward to next week with another daily update and review on Monday. Bye-bye.